Hello and welcome to this webinar on how to trade indices for XTB. If you look here on the XTB homepage and go and log in xStation 5, then you can open up our web-based proprietary trading platform xStation 5. As you can see, this is a default setting as you come through to the market, and if we want to look for indices, we go to indices here on the left hand side. You can see they're set into three subcategories: Americas, Asia Pacific or Europe. First off, if we focus on Americas, you can see here this links all the stock indices we offer for the Americas. You can see here the percentage daily change, the bid price, which is the price you can sell these markets at, and the ask price, which is the price you can buy these markets at. We take the US 500 for instance here. If you click on the tab, you can see more information around the market. You can choose the quantity you wish to trade of the market here. This is the number of lots you'll be trading or contracts in the CFD form. And you can also find some instrument information if you click on this function here. Instrument information, you can see the trading hours here. The market runs nearly 24 hours a day from 5 past midnight to 10:15, and that's also open from 10:30 to 11 at night. This is GMT. You can see the daily, the weekly and the monthly change. You can also see the market sentiment. This is a reflection of positions currently held by XTB clients. You can see if XTB clients are bullish and in long positions or bearish and in short positions. At present, you can see 57.9% of open positions from XTB clients are currently long this market, looking for the market to rise. You can also see the minimum position size, which is a micro lot here, 0.01, and the maximum position size. So to execute a trade, the first way you can execute a trade on the left hand side here, you can simply click on buy or sell. Let's say for instance we choose to buy this market, and you can see you get a notification up here, buy one lot in the US 500 at 2713.6. Now if you turn your attention to the bottom of the screen, you can see this open position here. You can see the price, you can see the market, the buy or sell here, the volume, the open time, the open price, stop loss, take profit, current market price, any commission or any swap, which you don't need to worry about on a standard account. Now, I'd always recommend having a stop loss on your trades to minimise your risk if you do find yourself in a losing position. And if you want to apply a stop loss, you simply click here. You can see the stop loss in terms of choosing. If we say 2,700, would be 13.6 below the market, and if that is hit, that would replicate a loss of £489. You can see this warning which you get whenever you place a stop loss for the first time. You can also do a take profit in the same fashion. If you click on a take profit here, and let's say we want 2,800, that would be a gain of 86.4 pips or £3,111. Again, click here. For the stop loss, there is another function you can use, which is a trailing stop. So this basically moves the stop loss in closer to the price of the market if the market moves in your favour. And therefore, if the trade goes onside and in your favour, you eliminate some of the risk that you'd have on the downside. If you click on trailing stop here, you can choose how many points you want the trailing stop. If we say 20, you can see this is now 2691.8, 2692.1, and you can see this will move in if the market price moves higher. You can see the star here indicates this is a trailing stop loss, and that indicates that the price will move following the market by 20 points from the highest level since you've entered the trade. Okay, if we look at indices in the charting form, we can start a new tab here, and let's just say indices. And then if we want to chart a market, say US 500. So we have the cash and the futures. So if we just take the cash to start with, you choose the time frame up here. So you can see going from 1 minute up to 1 month. At present, we'll look at the daily chart just to get a nice overview of the market. You can see here the market is charted as such. Turning our attention to some technical analysis that we can do on this market. If you want any of your typical technical analysis indicators, if you click here, you can choose one. So say for instance a simple moving average. And if we put on a simple moving average and click here, you choose the period, the colour, thickness of the line, and whether this moving average is based on the open, the close, the high or the low. I personally prefer the close, but it's up to each trader's own individual preference which they select here. So let's say we have the 200-day SMA, because I know this is interesting to watch of late, and you can see that the market just yesterday fell down and touched this 200-day SMA. Now, one way you can identify the trend in a market is by looking at the 200-day SMA, and what you simply do is if the price is above the 200-day SMA, as it has been for the vast majority of the past couple of years, you'd say that's in an uptrend. Therefore, trend followers will be looking to buy the market. This doesn't mean the only trade you can do is go long the market. You could obviously take a short position, but you should at least be aware that if you do go in a short position when the market's in an uptrend, you are in a counter trend position. Alternatively, if we go back here to 2015, for instance, if it does that, you click on move automatically to most recent. If you untick that, it allows you to scroll back without bringing you back to the present day, and you can see some of these fairly big declines we had here, for instance, in the summer of 2015, and also at the tail end of 2015, early 2016, both times the market had dropped below the 200-day SMA. So for me, looking at this now going forward, you can see we have held above this 200-day SMA, and this is an important area to look for going forward for possible support. If you want to find out exactly what that 200-day SMA is, you can use this tab here, and if you hover it over today's candlestick and then look on the top left-hand side of the screen, you can see SMA 200 is 2539.5, so that gives you the exact reading of what the 200 SMA is today. For instance, yesterday the SMA was 2537.8, and you can see obviously as candles from lower down are dropping out of that 200 SMA, the figure itself is rising, and we're still on an upward trajectory for the 200 SMA. Now, the US 500, speaking in more broad terms, is the US CFD that we offer on the S&P 500. So this is the 500 largest publicly listed companies in the US. It's the largest stock benchmark in the world. It comprises of stocks both from the New York Stock Exchange and the NASDAQ. You can see we made an all-time high just recently, around here at 2880. This is an area you'd look to maybe as possible resistance if you're trying to pick swing levels for highs and lows. As I say, drawing possible support on the low that we got from yesterday during that major decline here, around 2530, like I say, roughly coinciding with the 200-day SMA, is an area of support. You can see at present we kind of sit in between these two areas, and if you want to look more closely at how we're moving lately in this region, you can use a smaller time frame. So let's say we go down now to a H1 chart. You can see the 200 SMA now is an hourly simple moving average, but I'll just erase that just for simplicity. And if we take a fib retracement from that high, we can see how much of the recent decline the market has recovered. You can see the market has recovered more than 50% of these declines, and if we do get back up to the 61.8 level, then we could break above there and we could be set to move higher once more. Now, for the Fibonacci retracement itself, if you click on here and go on show price, it will show you what price each individual level is. You can see the 61.8 is 2747.6, I beg your pardon, and the 38.2, for instance, which on shorter time frames appears to be giving some support, is 2665. So these are areas you might want to keep an eye on looking forward when you're trying to identify trading opportunities. If you want to add another chart, you can just click here, and let's say we go US 30, and we open up the US 30 chart. Again, I like to start on a longer time frame so you see what the overall trend is for the market, and then you can use shorter time frames. If you want to look a little bit more closely at the chart, you can go here on main, and that will just make it so you can see the chart more closely, and it doesn't show the open positions on the bottom or the watch lists on the left hand side. So again, a very simple way you can look at this is use an SMA 200, and you can see again, whilst we did have these big drops recently, we stayed above the 200 SMA, which is suggestive the market is still in an uptrend. Other techniques you can use when you're trying to identify the trend, you could also look at Ichimoku clouds. So Ichimoku clouds just be found here by Ich, and you can see these are the default settings, 9, 26, 52. You can obviously change the thickness, but we'll leave that all as it is at present. And you can see what we had yesterday was a brief drop below the Ichimoku cloud, but importantly we managed to close back above it. Now, different trades or different analysts have different ways of viewing this. I personally look at daily closes and give that more weight than intraday moves. So if you have a daily close below the Ichimoku cloud, then that could be a sign that the uptrend is in threat and we could be set to go lower. Whilst we have daily closes above there, as you can see, which has been the case all the way since a long time ago, it seems now, November 2016, the US election, when we had this bullish hammer, closed back above it, which made it out the whole way up. We've been above this trend identification technique. Now, if we look back on the cloud itself, you can see the Senkou span B, 52 periods. This is obviously lower than the 200 SMA, so this will be a little bit more sensitive to current price movements. And if we could maybe just try and overlay the SMA, you can see the 200 SMA is further away from price because it's taken a longer term view of the market over 200 periods rather than 52 periods. So you could say the 200 SMA is a longer term trend, whereas the Ichimoku itself is more of a sort of medium interim trend. If you want to look very short term, or even more short term, I probably should say, you can use exponential moving averages. So if you use a 21 period here, and you use an 8 period, you can look for moving average crosses. We'll just put this 21 to a different colour, so we'll change it to yellow. Now how this works is what you're looking for is one, which side of these moving averages price is. So when price is above them both, as it was all the way here, that's indicative of an uptrend. When the market drops below them, that can be seen as indicative of a downtrend. And obviously this is a shorter term perspective than those previous two techniques I showed you. What a lot of traders and myself do when you're looking at these two moving averages, what you're looking for is crosses. So if you have a positive cross, you can see around here where the blue moved above the yellow line, that's a buy signal. You can see all the way above here, whilst it's in that orientation, you could say it's a bullish signal and it's looking for longs. When you have a negative cross like this, that could be suggestive of a short-term downtrend, which obviously we've seen with this very large drop lower. Now what's interesting now is with the recovery, we are moving back up towards these EMAs, but for now we do remain below them. So unless we see a push above this 21 EMA at 25,582 and possibly even the 8 EMA moving above the 21 EMA to form another bullish cross, you could say this is in a short-term downtrend. So that's another US market. The third major US stock market that we offer CFDs on is the US 100. So the US 100 is the NASDAQ. So this is the 100 largest listed stocks on the NASDAQ exchange. Just to give you a comparison, the US 30 is based on the Dow Jones Industrial Average. So if people talk about the Dow, they're normally referring to or our CFD is not on US 30 is normally what they're referring to. And you can see for the NASDAQ 100 here, again, if we just look very quickly, 200 SMA, you can see, again, the market remains in an uptrend. So for all of these, the outlook, despite the recent weakness, remains fairly positive on a long-term trend identification view. Shorter term, however, there is some argument to be said that the uptrend has been broken, as shown by those EMAs. Moving our attention across to Europe, so if we just go back to this standard setting for a second, and we look to Europe indices here, you can see these are all the markets we offer, so Hungarian, Czech, Italian, Swiss, Netherlands. The most popular and the most widely traded are probably the EU 50, so this is the Euro Stocks 50. These are the largest 50 stocks which are traded on the Deutsche Börse. And we also have the DE 30, which is the German stock market, which is one of our most popular instruments amongst our clients, and the UK 100, which is the FTSE 100, so that's stocks listed on the London Stock Exchange. So if we want to add one of these, let's say the DE 30, you can see we can pull up the DE 30 here. Again, just for ease of viewing, I'll transfer to a main screen. We had a very interesting developments in this market lately. So you can see we had this previous all-time high around 13,530, which we saw back last year, 6th of November of 2017, where it made an all-time high at the time of 13,533. Now, very recently, I say very recently, just a couple of weeks ago, we did get a false break above here. Now, this looked like a very nice breakout, and I was thinking we could be making a significant move to the upside as we break these levels. I'll just put this support on. But what we got was a big rejection. So we had this break and close above the highs here, but you can see the next day we got this big rejection candle, and we basically engulfed the previous 2 days trades. This is quite a strong reversal signal, and the fact there was a false break above the previous high could give even greater credence to the reversal. After that, you can see the market drifted around for a couple of days, and we had 3 very strong down days. So this was last week, the Thursday, Friday and Monday at the start of this week, and then yesterday we got a big bullish engulfing candle as the market tried to recover. Another level I'd look for as possible support if I'm analysing this market would be taken from these prior lows. So these lows going back to the summer of 2017, around 11,930. And if we do drop into this area, I'll be looking for possible support, see if we do get some positive activity, and then we could take possibly long positions. Or if we do break below here, then we could get further risk to the downside. For instance, here, as we dropped into this 12,860, I was thinking this was a possible support zone. Once we smash down through here, you can see all this previous support from here has been wiped out for the time being, and the market has dropped lower, and then we quickly accelerated to the downside. The outlook for this market isn't quite so strong at the moment. So again, if we just use the 200 SMA, you can see this 200 SMA was broken below here with conviction at the start of this week, and we still remain below that level. Using this tool to see what this 200-day SMA is, that's 12,764. So really, for longs and bulls, they'd want to see this price move back above 12,764 and possibly even 12,860 before they think this sell-off is over. There could be more downside ahead, and if we do get reversal signals on shorter time frames, then that could present some shorting opportunities. Again, similar to what we looked to in the other markets, if we take off the SMA and just go to a shorter time frame, you can take Fibonacci retracements to look for the size of the move. So we'll just erase these and use this Fibonacci retracement function here. If we go from the highs, pull it all the way down to the lows, and you can see we're currently around the 38.2 level at 12,670. So this is an area to look for. Remember, this is an hourly chart now. If we do get some negative price action here, possibly bearish engulfing candlestick or something like that, or a pin bar, then that could be an opportunity to look for a short position with stop loss placed above the respective swing high. So that is the top 30 companies on the German index, and then finally we'll just look, actually I'll say 2 more. We'll have the UK 100, so like I say the FTSE 100. This is based on the CFD, and you can see we had a similar move here to what we've seen in the DAX recently. We had prior resistance at this level here, 7590, so you can see we pushed up, failed at this level, failed below here, failed again here. Break up with conviction at the start of the year. It's a longer turn, it took a longer time to happen, but you can see we did actually get a kind of false breakout here. Once we pulled back inside this level, you can see we first dipped back and found support here and went higher. Once we break down below 7590, the sell-off really accelerated. False breakouts can be quite strong reversal signals, and that was the case in the D30 and also the UK 100, where after we pulled back inside, you can see we accelerated sharply to the downside. In terms of swing support levels, I'd look back to these lows here that we saw in 2017, and you can see they coincide fairly well with the lows we saw this week. So this is an important support level here. If we do get a daily close below 7,090, that will obviously be a negative development for this market, and we could get further downside. At present, we're pulling back into the middle of this sort of range. You could say there is a little bit of resistance around these levels, around 7,300. Here you can see we had a false break, and again, like I say, this time the false break was to the downside. Once it pulls back inside, that's quite a strong reversal signal, had a strong move higher. You can see this level held once more, so this is an area to keep an eye on going forward. Just for practice, we'll use the 200 SMA. You can see the market has fallen substantially below the 200 SMA, which is currently all the way up at 7,457, so it takes quite a lot of gains to get back up to that level. Now, as I'm recording this at the start of February, I know there's a big event coming up for the UK 100. One way I'll know this is obviously looking through this calendar tab on our xStation platform. So today's Wednesday, the 7th of February. If you looked at tomorrow, Thursday, the 8th of February, we have what you call Super Thursday. So this is one of the 4 occasions each year when the Bank of England announce their rate decision, and they also publish their quarterly inflation report here. You can see the rate is expected to be kept on hold with a unanimous vote in favour of this. the quarterly inflation could be a very important thing to keep an eye on. So this is a major event risk for the UK 100. Now, people trade around these events in different ways. Some people try and take positions ahead of them, hoping that it'll come in their favour. I personally prefer to wait for the event itself and then see how it impacts the market. For instance, if we get something negative for the UK 100 tomorrow off the back of this Bank of England rate decision and inflation report, then it would be a nice area here to go short, because you have price running into prior resistance 7295, possibly 7300. Alternatively, if we get some positive news for the UK 100, we could see a push back up through this level, and we could see another move, recovery back towards that 200-day SMA. So it's quite nice when you get a market like this, which is hovering around quite a key prior resistance or support level heading into a major event. Because either way, if you do get a strong move, you have a good level to trade off. So you can either look to short with stops above, or you can look for a break higher with stops below. Finally, and just wrapping this up, we can look at the Asia Pacific region. This is the smallest region in terms of our offering for instruments, but you can see some of these are quite interesting. The Aussie 200 is fairly widely followed, and in particular the Jap 225. So the Jap 225 is also known as the Nikkei 225, and it's the 225 largest stocks listed on the Tokyo Stock Exchange. You can see here this market is quite volatile, so there has been some fairly big moves, and you can see, for instance, back here last summer we got a very strong move from these lows down here around 19,000, and it quickly made a high in a space of not much time at all around here. So if you want to measure what this move is, you can take it from the low and pull to the high up here, and you can see the market did over 4,000 pips in just 40 days worth of trade, so just over 2 months. So that's a very strong move to the upside. Alternatively, recently we've had a very strong move to the downside, where the price has dropped around 3,100 pips in just the last 14 days. So as I say, this is a very volatile market, but with volatility can come opportunity, and there's been some fantastic trading opportunities in this market of late. Just to finish off, if we use the 200 SMA, this is my sort of default trend identification technique. You can see we've pulled back down into that region, and similar to the US 500, we found some support there. Going back, you can see previously this happened. We did have a few closes below the 200 SMA. This is almost like a false break lower, as I was talking about with support and resistance. And once we moved back above this, you can see we had a very strong move to the upside. In fact, going all the way back to late 2016, the vast majority of the time this market has been in an uptrend, and you can see we've had significant moves higher. Speaking of uptrends, just one final thing I'll leave you with. You can always just draw trend lines simply to show the price movements that you're getting. So if you take this low here and you try and draw a trend, you can see the market has been in an uptrend, retesting there, and you could say until we see a break below here, we have a series of higher lows and higher highs. You can see from this low we have a higher low, possibly a higher low. We don't know at present, but we think it could be a higher low. On the upside we have a higher high, a higher high, higher high, and a higher high. So an uptrend is characterized by a series of higher lows and higher highs, whereas a downtrend is characterized by a series of lower lows and lower highs. So that's something finally to keep in mind. Just in terms of managing your position, you can see now this position that we opened earlier, you can see the market price has gone in our favour, so we've moved on side. There's a profit showing here of around £140. You can see the stop loss has also been squeezed in. So now the stop loss is only 15 points below our entry, so you can see we've actually reduced the risk. So if it would have gone all the way back, we wouldn't have lost those full 20 pips that the stop loss were. We would only have reduced loss, 15 pips due to the trailing nature of the stop. If you want to alter the position, you can use these here, so you can reverse the position, double up on the position, or just close the position. For now, we'll just close the position here, and you can see there it pops up. And if you want to look at your previous trades, you can go on history, and it will fill in with your previous trades, telling you open time, close time, and you can review your trades, see what your stop losses were, see what your profits were, etc., or your losses. Okay, that pretty much concludes our introduction to indices. Thank you for listening, and good luck if you're trading these markets going forward.